Gents, welcome back.
Hello, hello.
Nice to see you both. We've had a lot of FaceTime, a lot of Zoom time the last couple of days, the three of us. And I have the pleasure, Dylan, of seeing you next week. So we're recording this early May. We're going to be at the Insurance Capital Summit put on by the fine folks at Equal Ventures, one-day conference in New York. Excited for that.
It's their first. So that's
their first annual.
They've got some great speakers on that, by the way.
Good speakers.
Very excited about that.
Yeah. Then I get to see Peter the week after in Chicago. We're doing a happy hour. Getting a little, not sloshy, but just, having some fine folks out for drinks in the insurance space in Chicago.
That'd be fun. We've got drinks on one night, and then I think we've got a baseball game on another night, haven't we? So we're really having the Chicago experience.
You're going to get the American experience, Peter.
Yeah. Well, and we're driving up. We're going to drive, the four of us and our good friend Michael from Allium. Actually, he's done driving up. He's going to come back down. But it's going to be me, Sven, and Peter doing a little road trip from Chicago up to Madison to hang out with the Creative Destruction Labs group up there. Peter and I have to fight to the death in survival
of the fittest. Yeah.
Yikes.
Only one makes it out. I don't think that's true, but it would be cool if you and I
think it's pretty likely for you to come out, Doug, if you're driving the car.
Well, that's true. Yeah. I'll stop for a bathroom break and take off. Peter will be in the bathroom, hitchhiking up.
I'm just imagining Peter driving the car on the wrong side of the road, and none of you make it to the. You're like, here's the destruction part now.
Yeah.
Yes.
So it's
going to be quite a couple of weeks then coming up, and we're still going to be putting out episodes, right? So
and putting out
on the
episodes.
age of the MGA.
Yeah, we're not stopping. We'll do it on the road. We'll do it. We'll do a car episode. Dylan will call you up, and
I like it. I'll just sit in my car and pretend like I'm driving.
I got to figure out. I think Travelers is insuring me for this trip. So FYI for all the fine Travelers folks out there through Turo, maybe you need to up your rates slightly if we're doing that.
This is a terrible idea. Anyway, right. Well, off to insurance. So I was actually having a driving thought the other day, right? I'm sitting there, also insured by Travelers. Damn it, poor Travelers. And having thoughts about insurance. It's a little different than shower thoughts, fully clothed, in my lane, driving appropriately, but thinking about insurance. When I was thinking about commissions and percentages and being compensated by a percentage rather than by a straight salary. And I was thinking, and I'd love to get your thoughts on this. I was thinking about the idea that being paid as a percent commission of the total amount sold is a hedge against inflation, right? Because you're now, as the price of the item increases, the salesperson makes more money. Whereas salaried worker is essentially trying to hope that their raises can keep up with inflation. Now, you have to consider price elasticity of demand, but we'll get back to that in a second. If you're selling something that's increasing in price even faster than inflation, let's say a product that's impacted by social inflation as well, right? Not just ordinary inflation, you're even further ahead overall and even further ahead than the inflation rates. So now getting back to the elasticity of demand, we're talking about, so the idea that it's relatively inelastic, the product of insurance, and due to government contract reasons, like every business, of course, is going to want you in their contract to have X, Y, and Z insurance limits. So you're required to have insurance. So now you have an inelastic product, inelastic price elasticity of demand, and you also have a percent increase, or you're being compensated on a percentage that is going above inflation, because then also social inflation. Are brokers and brokerages just absolutely killing it over the last few years?
Well, yes, they are. I don't know if they've thought out. What, Dylan? It's Friday morning, man. Come on, you're throwing a lot of economic terms around, and I'm just trying to get through the day here. But Yes, and it would be interesting to find out if that's part of the reason why. Another part of the reason why, and this is a great segue. By the way, this is the first time we're going to try this. So we have our guest waiting in the background.
Oh boy!
And we're going to do an intro for him and then invite him on the show versus kind of the way we typically do it, which is we'll intro them and then cut it together. For our one listener out there, that's how we do it. So why don't we talk about this guy, Johnathan Thore, excuse me, and how much agents are loving him in Texas, and I think more states soon. Maybe we'll get the word from him on that. So Johnathan comes from a very pedigreed insurance family in the South, in the Texas area. Want to hear that story as well. But he's taken an interesting route where he built an RRG with an MGA instead of going directly out and getting capacity from a reinsurer. So if you guys are ready, why don't we bring Johnathan on and we'll get down to business here.
Yeah, it'd be an interesting one. It'd be an educational one for us.
Hey,
Johnathan.
Good morning, everybody. How are y'all?
Johnathan.
How you doing?
Hey, Johnathan.
Doing well. Nice to meet y'all. Doug, good to see you again.
You as well, Johnathan. So Peter and Dylan, these two guys, you haven't had the chance to meet Johnathan yet. I met Johnathan a couple months ago now, I guess, and have been really interested in his journey in building his RRG and MGA. So Johnathan, why don't I let you do the intro on your company rather than me trying to blather through it?
Yeah, sure. First off, thanks for having me on. Doug was telling me earlier, y'all kicked Mark Zuckerberg for me, which I think is, obviously a big, I'm flattered and not surprised. It's the obvious thing to do. So I'll do my best to make sure we learn some interesting things about my journey, why I went the route I went, for better or for worse, and any insight I can give to what I've been working on. My background is somewhat interesting. I would say probably kind of winding around. So I got an engineering degree, went to grew up in Houston first off, then got an engineering degree from Texas A&M, which is kind of, the local engineering school. Went to law school thereafter, and then was an IP litigator for 3.5 years and had a nationwide practice doing that. I am licensed in front of the USPTO, but I never wrote a single patent because I just had no interest in sitting there and doing that. And then, like I said, 3.5 years in, I went to work at my family's carrier. So my dad founded and owns American Risk Insurance, which they write in Texas and Oklahoma. They write homeowners and commercial property. And when I started, they were writing about 27 million and change in premium. And this is, non-inflation adjusted. So you're talking, 10.5 years ago. And now they're writing around 175-ish million, somewhere around there. Had a lot of success. The company did really, really well. Obviously, surviving Texas and doing well is a tough thing to do. There were a lot of reasons for that. Then in July, I left and left for a lot of reasons, but left and decided to start my own carrier and for full disclosure, no backing, no relationship to ARI or not even any help, not even a phone call, starting from scratch. And so went with the reciprocal exchange model for a lot of reasons. And I'd love to, happy to go into those, why go that route. And have an MGA. And very fortunately, probably about, because I left, I would say it was looking like for about 6 months that I'd had it and I was going to leave for a lot of reasons. And then when I finally left, it's not, I didn't have some grand plan that I had been working on. I kind of left, took my family to Vietnam for 2.5 weeks, got back, and then was like, okay, well, I better figure out a way to make a living. And so, when you're kind of deciding what do you want things to look like? What do you want your journey to look like? And about 3 months into that, because I had put together a pitch deck and was looking for investors and all that stuff, I met my partner and co-founder, a guy by the name of Celestine Bedicall, who's been a super successful tech entrepreneur here in Houston. And and we were already friends, and we'd hang out, and we were playing tennis one day, and he said, shoot me. He would just sold a company, and he was like, well, shoot me your pitch deck, and I'll take a look at it and help you if I can. And I did, and he looked at it, and he had this perspective that I'd never thought of. Again, it's kind of a lot of stuff happens by happenstance or randomness. He's like, well, I see you have this plan, and it's really good. And look, you grew you worked for a big carrier, you worked for a family business, you wore all the hats. And so, let's assume you know what you're doing. Okay. But how can tech, because he's a tech guy, he's like, how can tech make this better? Like, what can tech do in the insurance industry? And to be honest with you, I was coming from a background of basically zero technological adaptation in my prior carrier. And so I never thought about that. And even when I was going to do kind of my own thing, I never thought about that either. I was just going to, frankly, kind of just done what I'd done at ARI, build a carrier, probably do fine, and call it a day. But this really changed my whole perspective on, then you really kind of open Pandora's box, and then you say, well, man, there's actually all these processes, not just like at my old carrier, but at most carriers, we're talking 95%, that are just horrifically kind of outdated, slow. Getting them to adapt is impossible. I've lived through it. The average insurance executive, and I'm not, casting dispersions, but they're kind of in an age band where getting them to change, getting them to adapt is nearly impossible. The insurance people I think don't like change in general. Like, we see it in so many things. We see it in pricing. We see it in deductibles. We see it in all these different things where it's like we just love to sit still. And so then I realized there were so many aspects where there could be tech deployment. And obviously having a partner with a deep tech background, he was, before he kind of had multiple serial entrepreneurial successes, he was a executive at Microsoft, executive at SAP, executive at what's it called? I can't remember. And so, yeah, that changed my whole thing about focusing on technology, scalability, and where can we focus and how can we do that on the underwriting side? Like, I have no interest, like the first wave of insurtechs, they were all focused on bypassing the agent, like a distribution thing.
Yeah, we talk about that a lot, yeah.
Yeah, and it's fine. But for me, that wasn't those commissions. And Dylan, before you were talking about the, commissions are just going up and up. And that's right, because rates are going up, but then it's also carriers right now, especially in a hard market. I think there's more pressure on the actual percentage of commission than there's ever been. Mm-hmm. Right. And so I think you can, so I didn't really have an interest in working on the front end distribution platform, because I thought agency commissions, frankly, given what they do and what their commissions are nowadays, I think I could work within that framework. But all my focus is on the back end underwriting and then the customer experience. Yep. Which is where, I don't know that our industry a lot of actors in our industry, I don't know that they focus all that much on the customer, to be honest with you. They're in the business of like risk transfer and selling a financial product. And I think by doing that, I think you sell yourself short, where if you're in the business of just selling a commoditized product, right, you're going to get valued as a commoditized company, which ultimately is terrible for you, right? Because they're going to say, well, you're just selling a commodity. You've got, 80,000 customers. This is your margin. There's really nothing special that someone can't open up with a cheaper cost of capital or cheaper reinsurance and then come and undercut you, right? If you have no brand and you have no connection with your customer, then we're just going to value you as a book of business the same way you value a brokerage or whatever. And it's actually, but you're a risk-bearing entity as well. So you kind of get the worst of both worlds.
Yeah.
Anyway, so that was the introduction that I've now taken like 45 minutes of your time, but I clearly have opinions on everything. So,
Jonathan, you're a podcaster's dream. We don't have to. You give us all this old content. We sit back and relax. It's amazing.
No.
I just told Dylan that it's Friday morning for us here, and I'm still getting going. So you take over. Well, so I think we're gonna have there's some nice segues there into the ROG. I think what I'm hearing as well. So not only the tech angle, but maybe the branding part and how to create some stickiness there. But one, yes, as you said, Zuckerberg is super pissed at us right now because we did boot him off.
Right.
And that's okay because he's not launching an insurance product right now. We've told him once he does, we will have him on. Until then, get your kooky glasses off.
I should have worn the glasses now that I think about it.
Yeah. Two, I don't think I knew you were an attorney and now recovering attorney. I am as well.
I remember you told me that.
Not a similar background, I guess, but I did IP and data security, and definitely decided that I couldn't do that anymore. And then took a similar journey as you, building an MGA. So yeah, maybe you did tell me that, and then I forgot. I apologize. But I think it's interesting your view, because you were growing, and you kind of. But the one thing I do remember you telling me early on is how you grew, your family's book of business, like how you kind of took that and grew it and standardized it. And you were a big part of that. You were doing that kind of at the time that insurtechs were telling the world that agents would disappear, right? That we're going to disintermediate these people. They're unnecessary. They're expensive. And sometimes agents were their own worst enemies, in the sense that you would go to them and say, hey, I want you to do this a little bit better, or I want you to take this process on, use this piece of technology. And they're like, we make so much money. Why would we do that? So everybody's gotten better now. I think there's better actors out there, but I'm sure it was really interesting for you to see that taking place and knowing like, no, these people are not disappearing. If anything, they would become more important. And I think that's really what I've seen you do, in the last month or so that we've been working together, is you've already, you're bringing agents on, and you're still kind of getting to the point where you're going live, but you are really focused on the agency channel, which I think is really interesting. And more should be doing that rather than figuring out how to remove the agent from the conversation.
So when that was happening, and there were a lot of guys, and I'm not going to name names. I would love to, actually. I usually do, but since this isn't a recorded environment, I won't. But what was happening, because I would go and check those guys out too. First of all, there was one guy who came into the market and they were like 50% less than everyone else, right? And I said to myself, well, I know what our margin is, and it kind of sucks right now. And so I don't know, math is math. And if you're 50% less than me, then you have to be you're losing 49 cents or 47 cents or whatever. And that's not sustainable. And I think they ended up losing $85 million on $85 million in business. But I would try those guys out too. And what I learned was like, I would, you go online and you enter your information and all that stuff. And then you get a quote, but then you'd still have an agent calling you from them as well, right? So I was like, okay, well, you're having to pay that person, right? Then you have because agents do things. So you're having to you're still going to have manual service processes, but then you're also having to develop a tech stack. And so I was like, well, I don't really see, I mean, is that really costing less? And at the time, commissions were 15%. They're, to an extent, that's not, those days are kind of gone for now, at least, is that I wasn't seeing the math, because I was like, well, it's not that 15 is now 0. It's something, right? It could be 8, it could be 10, but then you're losing all that. Are your expenses now going to be high because now you're having to do more servicing than you normally have to do? What's that customer service experience going to look like? And then in certain scenarios, the agent acts as your advocate. So who's that advocate going to be for you? And so it's, I mean, look, and then now a lot of those kind of people who've done that, I think they've definitely let their foot off the gas on that, and they definitely have an agency force that they're paying something. And frankly, the rates, they kind of, especially for that first wave, a lot of them blew whatever goodwill they had with reinsurers. And they're I think there's a lot of kind of first gen zombie insurtechs running around.
Yeah,
I would say
and we're seeing them get acquired, maybe not for the tech so much as the book, and it'd be interesting to see what those numbers are.
Which is not a fun way to get acquired.
Right. Yeah.
Tell you from what I've seen experience wise, that's, if you're getting acquired for your book, that's not a fun.
And especially, if the VC or the money behind it was expecting, 10, 20, 30x return, that's not what they're getting. And so that you said math is math. I think the caveat there is if you add VC math into it, then it might change the equation. There's a lot of lessons learned, I think, over the last 5 to 8 years, let's call it, from people that had never invested in an insurance entity before. I remember like 2018, 2019, all of these VCs were pounding their chest to have their portfolio companies become insurers. I'm like, well, why are you taking this technology company that should have 60 to 80% margins? You're shoving it into a business model that on its best day, right, could have a 5% margin, and then still expect the outcome that you want from that. So a lot of lessons learned for sure. And, it sounds like you're applying, some of them. You didn't make the mistakes. You saw others make the mistakes and kind of had the internal.
I mean, it's not fun to like sit and bite your lip while you see people do actively stupid things and burn up capital, because insurance actually is a really good fit for kind of the things that make a VC super excited. I can write $1 billion in a day in our industry, right? Writing premium is not an accomplishment in this industry. It's the easiest thing to do. Making money off said premium is the hard part. So when a VC, when they look at their normal metrics and they're like, oh my gosh, they're growing, they wrote 100 million this year, they're up to $1 billion the next year. Oh my gosh, this is exactly what we're talking about. Move fast and break things. First of all, you can't really move fast and break things because we're a regulated industry. And two, like that's writing $1 billion is not an accomplishment, because you're selling dollars for 50 cents. I'll set up a stand outside my office selling dollars for 50 cents, and I will write $1 billion worth of business. And so, it's just not, we're very different in that aspect. But I have some VC friends. There were some trial by fire, some definite lost capital. I think there's frankly some publicly traded guys that have gotten lucky that they brag about items like being cash flow positive, which is just, that's not a thing in my industry. We're supposed to be piling up money, and they're bragging still about metrics that make 0 sense in our industry. And they get, I guess, investors that are not necessarily accustomed to how the industry works putting up lines.
How about 2% loss ratios? I think I've heard that a few times. Maybe on former Twitter.
Yeah. Johnathan,
there are people who just don't understand what they should be measuring, and when you have a 2% loss ratio in your first few months of operation, I think the quote, we'll have to find it. I feel bad making fun of people, but they kind of deserve it sometimes. It was after 6 months, we only have a 2% loss ratio. Just blatantly telling somebody, and this is an auto, long tail liability law. Like,
right.
We are telling you that we don't understand what we're talking about.
Yeah. In property, that's, the losses catch up with you a lot faster. The storms have, especially in Texas. You kind of know where you stand a lot faster. And so, but that's, in a long tail business, it's funny you say that. So all these carriers, like especially at the reinsurance level, I think there's a lot of, they kind of move as a pack in the sense like what's the hot product to write. And back in 20 and during COVID, they were all really excited about casualty. And because they weren't paying losses, because the courts were closed. So, nothing was, you weren't getting your nuclear verdicts. And now it's just like nuclear verdict after nuclear verdict after nuclear verdict. And now they're not so hot on it. So there's always, it's funny, even the most sophisticated players on the planet sometimes can miss things.
Yeah. So, Johnathan, we kind of skipped over the actual product, what you're solving for. I think I'd love to dig into the tech a little bit more and like your angle on that internally and customer experience, and definitely the RRG choice. Maybe you can just like quickly walk us through, through the product and, why you saw the need to launch this specific product and for your customer base.
So we actually we're doing a lot of interesting things actually. And what I would call what our phase or Gen 1 tech is going to be in a year or 18 months. I think what we're going to be doing is so different and just going to get better and better. But the first generation of technology is how do we quantify and how do we really analyze roof exposure? Texas has a lot of activity. And so we built a lot of tech out of understanding what the primary driver of the loss is. And there's a lot of, it's not necessarily like a space race, but there's a lot of vendors you can rely on. There's a lot of people that are looking at the same thing. And what we've done is a platform that's kind of brought that all together into a smart underwriting kind of manager. And it's really, I don't know the best way to say it. It's like, there's so many great tools out there. There's so many great AI tools. There's so much going on in the tech space. And there's a lot of insurance tools as well. The one area where I see kind of what is a barrier to implementation is most of these companies have no idea how to properly implement them or are interested, or frankly, even if they are interested, do they know how do you apply? Okay, you've got this great tool that gives us XYZ data. Okay, well, you have to apply a logic to that. How are we going to do that? Who's going to even apply the logic? Where's that logic going to sit? What kind of, just what is the infrastructure of that look like? And don't get me wrong, there's some very sophisticated players, but there are some mostly very unsophisticated players, where being that nexus for where all these great tools come together. I don't know that anyone's, I like to think that I'm going a long way in solving that to where, frankly, thanks to my partner, it's not like I'm some tech guy, that we're building this kind of centralized node where you can plug in all these vendors and all these great tools. And so that in that way, and it's for ourselves so that we can always be innovating and piggybacking off of others' innovation and plugging that in to our system to improve performance. And so it's a really interesting time, but I definitely see some barriers to where I think some of the guys who are doing just tremendous things, there is still a disconnect to the implementation process. If that makes sense.
Yeah, I would agree with that, Johnathan. So we're at Lotto, and I know at Tourist, we think of these things very similarly. We try to be open, so you can. I love your term. You can piggyback on this amazing innovation that's happening and bring it in. Interested on the implementation side that you talk about, because there are so many tools out there. There's so many options. What's your process for deciding this one makes sense for us, this one adds value versus this one doesn't?
So it's partly because we are a startup, part of it's cost, right? Okay. And so, and I think that's been the most interesting part of the journey, is you have this wish list of everything you want to do, right? You have like this vision in your head of what the experience can be, where the tech can be, but you've got to get that caught up with the reality of the cost. And so as a startup, you actually end up doing a lot of give and take of deciding, what is your core tech, right? What is the thing that you really want to focus on? And then where do you want to spend your tech dollars? And then how do you want to, and then you have to really put together a roadmap and stick to it and say, okay, well, when we're at this size or we're at our first 5 million, 10 million, 25 million, whatever, then I really want to pull the trigger on this. And so it takes a lot of discipline, but I will say vendors are an interesting part of the job is like you spend a lot of time, believe it or not, you're a startup, right? So you spend a lot of time inspiring vendors that you know what you're doing, that you have big aspirations, that you're here for the long term, and you're here to make a difference and really be a advocate for their tech and not be shy about being an advocate. And also give them feedback and I tell every vendor we work with, like, we will always beta test a product for you. If you ever have a product and you want to beta test it, we're there for you. And so, I don't know, it's been really interesting. So it's a couple of components. You really want to look at the vendor and see, are they on the cutting edge? You want to look and see what is the cost and what they can do to work with you on the cost. And then deciding whether that fits kind of in your vision and fits in your time frame and fits in your kind of your budget.
Johnathan, when I purchase anything from a vendor, it's really important that to me, before I purchase it, that I can be certain that they're going to be a partner rather than a vendor, right?
Right.
So for me, it's especially as a startup, what I'm looking for is someone who's willing to work with you. And you brought up, of course, the pricing, but it's also really the features that if you're trying to do something different and you're trying to say, hey, this is here's my secret sauce. It might not be your core platform that is your secret sauce, right?
Right.
Your core platform might be off the shelf, but also the product that you've built. Maybe the product is partially the secret sauce, right? There's something about it. There are aligned incentives. You've done something that makes it so that this product is superior, and you say, great, that's the thing. But now I need a couple new data fields in my core system, right? That are not there. Are they willing to make those changes? What's that going to cost me? How fast is it going to be? So that partnership and being able to also then improve that vendor's systems or whatever their offering is, provide them with that feedback, have them be happy to hear that feedback, and to actually quickly put it on their roadmap. It might not be the first priority, but if they're not, there's a difference between saying, hey, it's on our roadmap and then it's never being done. That's a nice way to say I will never do it. But it's also, if they're serious about that, they're like, yes, that's probably a month out, right? That sounds great. That's an easy fix. Let me change that. If it's something critical to you, all right, we will start building this today, right? We're going to prioritize this for you to make this work for you. And so that's what I'm looking for from a partner. And you're not going to get that from a mega corporation, right? There's certain things, if you're trying to get ISO data, right, they're not your partner necessarily, right? And that's not to put them down at all. They're just a very large organization. They can't make every little tweak for every little company, especially if you're not bringing in the big dollars for them. But if it's if you're a startup and you're willing to work with a smaller company, that's the expectation that I have, and really understanding that before I pull the trigger and sign the contract is critical to me.
So it's super interesting, actually. So companies large and small, because of what we're trying to do, have actually been more receptive. Like, it takes a long time to get to the right person to ask for the innovation, right? But once you get there, they're surprisingly open to it. And we do have a bit of an edge where we have a very robust we just have very robust programming because of kind of my partner has a big programming infrastructure. So a lot of those features we have an insane luxury that it's like we come up with it and it's like, okay, cool. And then they go to work. And then I do lean on him as well, because he's a visionary too, in like, okay, John, this is fantastic, but how do we think of this in a scalable way? How do we do this where if we ever want to license this technology to other carriers, like we need to really be thinking about things in this and doing programming this way. So we have the ability to take relatively bulky interfaces and bulky data, and we can bring it in and do what we want with it, which is a huge advantage. I mean, we'll see when the results come in, right? I mean, who knows? But at least we have this unique ability to be able to do that. And so we kind of almost take, like, look, if you're going to build value in your tech stack, I kind of prefer vendors to, if they have a bulky interface, fantastic, because then that means I'm adding value in my own technology company I'm adding value, which is always important for us. So.
Right, it's hard for somebody else to come in and replicate that.
Yeah, I know they can't come in 5 minutes and do it, because I had to work at it for several months and have software engineers, looking at it, understanding it, and programmers and all that stuff. So
well, I think you're so we obviously work together. I like getting the emails from you. You can tell you're engaged, because not everybody is. Like, sometimes it's like, hey, we're checking this box for this thing that we need to do, and as long as it works, then great. Maybe you have you have a great team as well, like they're utilizing it, but you come in with emails every once in a while. It's like, hey, I was thinking about this, can we do this? And I think that really shows, how you guys are all thinking about the future. Somebody brought up secret sauce, maybe it was Dylan, because I think there's not only the technology aspect to what you're doing, but the reason you chose the model that you did, and I think that's not necessarily a tech choice. Maybe the tech is helping implement that, but I think in how you're trying to build your brand, how you're trying to find customers and align incentives. Maybe you can talk about the choice to move towards the RRG and some of the implications of that.
Right. So we are a reciprocal exchange, and so why do you go with a reciprocal exchange nowadays? One, I do think there's this, and I came from a classic stock company, no MGA, just very, very vanilla. One, you have to make a business decision, right? What is the market looking to invest in? What is the market valuing the highest, right? That's important. It's, ultimately this is a money-making enterprise. But also I do have this fundamental belief, especially when we look at the weather nowadays, or, look at losses. I don't know that I have that much faith in the stock company kind of setup, as opposed to, I think the future is where there's going to be a certain amount of insureds having skin in the game and understanding the results, understanding the weather. And so from a more fundamental basis, I think, and it's not like I didn't invent it. I mean, they've been around for whatever, a couple hundred years. But I think in the right here and now, I do think it's warranted. And also it disassociates you in your claims decisions, right? Because you don't necessarily, that doesn't mean you can be reckless. That doesn't mean you can be a reckless underwriter. And I'm not any of those things. And we're very careful, like we're building out a robust claims process, and our chief claims officer is fantastic, but it's really focusing on, I want to make a claims decision without wondering of what this does for profitability. And we never thought, like, I can say with a straight face, we didn't think like that at ARI, but you always worry about unconscious bias, right? And so here with Thore, I'm not agnostic to the loss, right? Because ultimately I need a stable exchange for my members' benefit, right? It's they're entrusting. I mean, we funded it, but we did that initial funding, but it's, they have skin in the game, and we want them to be paired with like-minded, responsible insureds, and it's our job to be responsible on their behalf. But I don't want that unconscious bias of like, if it's $500 less, it's $500 to me, the MGA. The MGA it's not agnostic. It owes a duty and it's responsible, but it's also not driven by loss ratio was 49 versus 52 or 47 versus 46 or whatever. We're not incentivized that way. There is no sliding scale commission, all those items that might even create that opportunity for unconscious bias. They just don't exist in the setup.
Johnathan, would you mind explaining RRG for someone sitting here outside of the US, not familiar with the entity, and for a lot of our audience, which is very interesting too, they're aspiring, to look to form their first entity in insurance. They might be coming from outside the space. They might have a vision for what they want to do. They may have heard of the MGA structure. They obviously know what a carrier structure is. Can you explain to us in very basic terms what the entity is and what it aims to do?
Sure. So a reciprocal, it's kind of weird though. It's a fiction of paper that's owned by the members that's managed by something called an AIF. Okay. And that AIF manages this pool of these members who have signed up and become policyholders. And that AIF goes and hires an MGA, to then manage that pool of risk for everyone. And where the reciprocal exchange, I think, has some real positives is the flexibility in how you fund that. To an extent, I think when you fund a stock carrier, there is a pretty, that is essentially trapped capital, right? Once you put it in, the mechanism for getting it out is quite difficult. And an exchange creates, the way these things are designed, that initial capital, it's meant to get it going, kind of the grease for the gears. It gets going, and then eventually the member contributions, the surplus contributions, release that capital back to you. And so it's viewed from kind of a capital markets, from an investor standpoint, it's viewed as it's capital intensive. Don't get me wrong, it is very capital intensive. But it's also viewed as a way of being able to create these entities with some kind of roadmap for that capital being returned to you. And then you have your MGA who then services that pool. And I personally am a big fan of it because obviously for all those reasons, but also our vision is obviously you go into new states and you get new pools of capital, you start new exchanges, even within Texas, you may have different exchanges that look at different parts of the market or have different risk tolerances. And so we really look at it as a really good platform for going out there into the market and serving, going into underserved portions of the market and hopefully succeeding.
Peter, there's actually very famous brands here in the U.S. That are actual exchanges. So Zurich owns quite a few. I think a lot of the mutuals, different form of it, but
it's the same concept.
Yeah. Johnathan, I'm curious so I think about mutuals or exchanges that have been formed over the last century, and a lot of them were grouped by characteristics or areas, or maybe like common need. But I think the technological capability of pulling risk out now is much different than it has been, at any point in history. And
right.
So I'm sure part of what you're doing, and you mentioned this, like how you're thinking about like roof exposure. And so if you're successful in what you're doing, you are probably finding people that are, less prone to abusing that insurance or just have better structures in place, and then that creates a larger pool of higher risk that somebody else is taking on. Has there been any pushback from regulators, as you've tried to build this, in them like thinking about the implications of your success, meaning like you're taking the cream of the crop, which you should be. That's the goal. But you're instead of like having interspersed losses within your book, you're able to like get rid of those and like pump somebody else's book up.
Well, so the mechanism is it's where is your pricing geared, right? And so our pricing is geared towards the subset that we're looking for, but you're playing within you're in an underserved subset, and you're using technology to get it, because you're doing what you would usually do. You're underwriting, you're inspecting, you're doing those things, but you're using technology in a way that really gives you an additional edge. And so that really, I haven't heard what regulator's opinion, but we're ultimately going into an underserved portion of the market and then using tech to get to create opportunity. And the way I view it is like any policy that's written with Thore, and it's true of any carrier, you assume it's because you were cheaper or there were reasons that you got that policy. And I view that as a benefit to the market, that creating more choice for customers, I think should always be the end goal. And so I think departments in general, I think they're coming around to the viewpoint. I think there's some departments that are not there yet, but making more choice for the customer and however that choice gets created is ultimately a good thing, because it is a very competitive market. I mean, yeah, is the market a little less competitive than normal? Sure. Is it cutthroat still? Absolutely.
Yeah. So we've been kind of like going around the edges of claims. So Dylan is a former claims guy, claims through and through, runs in his blood. In fact, so Dylan and I worked together at my MGA. Dylan was my head of claims, and I nicknamed him the god of claims and thunder. So Johnathan, your name, Thore,
right.
I assume is an allusion to the god.
Actually, no, not at all. And
it's not. Okay. All right.
No, it was the homeowners reciprocal exchange. It was just a cool acronym.
Just a happy acronym.
It just happened.
Wow.
I went back to my formation docs. It was like August 8th or something. It was like as soon as I got back from Vietnam, I was like, oh, I got to call it something, and I need a scalable name, right? And so I was like, the homeowners reciprocal exchange, that sounds pretty good. And then I was like, oh, Thore, that sounds neat. And then that's
perfect.
Again, I wish it were some exciting story. It is not. It is all happening.
Yeah. Well,
either way, Thor's going to come down with his hammer on some roofs. So we need to talk about that.
Yeah, go for it.
All right. So the unpleasant part. So we've kind of talked about risk selection. So
yep.
Part of that, and there's a pretty interesting organization. I'm not sure if you're familiar with them, but Insurance Institute, I always get this acronym wrong, Insurance Institute for Business and Home Safety.
Okay.
And so IBHS, it sounds like something that is
not as good as Thore.
Not as good with your tummy.
That's a nice ring, though.
Sounds like a disease to me. Yeah.
So it does, but they're an amazing place. So check out the IBHS website. It's really fascinating. They do a lot of work with the research of the materials and the construction of buildings and homes. And they have an entire farm out of, it looks like what you would think is solar panels, but they're all of different roof materials. And they are tested and measured every single day, the exact temperature changes and fluctuations, what they're exposed to naturally. It's an incredible facility. If you ever get a chance to go there, I would highly recommend checking it out. They can create a hurricane indoors. They have this massive set of fans, and they blow down buildings indoors. They catch them. They try to catch them on fire. They will send, flaming debris towards them and see if it catches on fire. And they make the most realistic hail in the world. They've painstakingly work on building not just balls of ice, but that's not exactly how hail balls are made, right? They freeze, refreeze, right, unfreeze over and over again and make this very hard tempered piece of ice. So they work on building the most realistic hail and then exposing roof materials to it. So anyway, if you have not been involved with IBHS, highly recommend that you
where is this place, Dylan?
I was going to ask that too.
I wrote it down, and we are going to look into it.
If you want to go on a field trip, I will help facilitate that.
Yeah,
it's in South Carolina. It's about 45 minutes away from the Charlotte airport.
Yeah, and then Hartford Steam Boiler, they have kind of I don't know if they do roofs and stuff, but they kind of have a technology center in Connecticut, I think, and they're working on kind of more interior type claims, but they have a similar thing going on.
Nice.
We have many trips planned for the age of the MGA, but I think we need to add South Carolina.
Let's go.
Yeah.
Let's go. All right, sounds good.
Johnathan, we're going to finish
from there.
Episode 2 is going to be an in-person South Carolina one.
Sounds great. I'm for it.
Sounds good. So the reason I brought that up is because that's all about prevention, right?
Yep.
That is building materials, that is design of housing to make sure that when exposed to these challenging environments, that they do the best they can, right? There's no perfect structure. We could all be living in bunkers underground in nuclear silos. That would be pretty cool. But this is, those would probably flood and then we'd still have a claim. So that's how it goes. So my question is, first of all, how are you intending to handle your claims? You haven't had any claims yet, correct?
No. So we're first policies are in June.
Couple months. Okay.
Yep.
Sounds good. So who are you having handle your claims?
So we use third-party adjusters, and then it comes into in-house examiners who review. And but where we're working really on, and so that's most carriers, regional carriers do it that way. It's nothing innovative. But where we're really working on technology is how do we do a better job? First, like the claims intake process. How do we do a better job on claims intake? How do we leverage technology? So like in a hurricane, people can make claims on their phone, on their, make calls, and whether it's they're talking to a human being or not, what does that experience look like? So that people want to file their claim and know that claim's been answered and get that acknowledgement right back. So that's really important to us. But then it's also how do we leverage technology throughout the claims process to improve communication, make documents readily available. What does the claims payment look like? Should we be mailing a check really? Or, there's great technology that people are working on to make those claim payments via ACH. And I've experienced that where it's like, we did everything great on the front end, and then we mailed the check and the check's lost in the mail and the insurance calling every 5 minutes, rightfully so, by the way. And, or, hey, can you get me my estimate? Like, no, it's in the mail, blah, blah, blah. And so what I'm looking at, what I envision is how do we get to a place where, there's an ACH payment and the documents are made electronically available so that they can get them to their roofer. And that cuts out processing time, it cuts out expenses on our end. But also I'm a firm, and I always preface this with, I might be naive, and you're always this is Texas, you're gonna have people whose first notice of loss is made via their attorney. Like that is the landscape we're in. That's the industry I'm in, and it is what it is. But I think there's a decent subset of claims that lead to litigation or whatever, where it was like the insurance carrier just kind of dropped the ball, right? Mm-hmm. It was either lack of communication, it was, messing up payment, making basic mistakes and reviewing the estimate. And so the question really becomes, where can we make that process more open, more faster, quicker, better? Because I think that's going to lead to, frankly, lower loss ratios, less litigation. Is it going to eliminate it? No. Are things still going to get messed up? I mean, that's the industry, especially in a claim scenario. But my pitch to, frankly, everyone is that we've got to do a better job in communicating with the insured. And I think we're not always, but you're going to sometimes give answers that are unpleasant answers, like this isn't covered, or that's not really worth that much, or it really doesn't cost that much to do that. And even in those unpleasant answers, I think if there's a trust in the process and fast and quick communication, I think you can reduce your litigation and get better loss ratios. And I make the pitch to reinsurers too. There are clients that you're paying more in losses to because when the hurricane comes, they're completely botching the claims handling. And you're going to be paying litigation for the next 7-8 years in a major way, because you can't just look at on the front end, for an insurance carrier, most of your client interaction where they can judge you is on the claims handling process. And I feel like that's actually where a lot of carriers don't invest enough time and thought and money in what does that experience look like.
Yeah. Sounds like some great stuff there. Yep.
Yeah, you're just preaching. This is fantastic. Say all that again.
Yeah.
There's a difference between giving bad news, that's rightfully so, right? Because the policy mandates it 2 days after the claim, then 6 months after the claim, because that's a completely different situation and you're pissing a lot of people off.
Yeah. I mean, there's how many files, Dylan, I don't know how many, how much you do on the what part in the cycle you play, but there's like, you'll see claim files where it's like nobody talked to the insured for 6 months and they called 36 times and blah, blah, blah.
It's just unacceptable.
So those types of things that claim audit is very important to find. It means systems also that are looking for this, right? I like to measure days since last activity, and activity is tied to notes and actions that are being done by the adjuster. Without activity, it cannot be resolved. Right. So looking for a very quick fix as far as to a lot of problems is making sure that the days since last activity is the appropriate amount for depending on the line of business. Obviously, it's very different for a professional liabilities claim that's in litigation versus a homeowner's policy or an auto policy where you're going to be touching it a lot. But tuning that into the right line of business and making sure that these things are being touched and something is moving forward. Always has to be moving forward.
Or if you need more information, how does that information from the insured, what is the methodology by which they can give you that information, and how does it get logged, and does it get lost in an email chain, or is there, there's a lot of, how do we make the insured's life easier, especially when you need further documentation? There's just so many areas to frankly build out. There's so much to build out on the claim side. Like I've told our tech team, I'm like, I know, everyone's under the gun and we're moving fast on our underwriting modules, but the party's actually just getting started.
Yeah. Claims is where you can make or break the product. Well, the ask for additional information that you don't have is one thing, but the number of times that you ask for additional information that you already have, right? So like, hey, fill out this form. I need your name, your address, your policy number. You're like, what the hell? You're my carrier. Why don't you have my policy number? Why are you asking me for this information?
Yeah, I know where your home is because we insure it, right? Now, that said, that could be different than your mailing address, and it oftentimes is. And there's plenty of landlords out there, right, who have dozens of properties and they don't want the mail to go to their tenant either. So to get that right is important. I do want to be clear. But so I guess, and I just want to make sure I understood you. So it sounds like the ownership of the claim is at the carrier level, right? It's with Thore.
The claims decision is made at Thore.
So the claims system is also held by you.
Yes.
Okay. And when you said third party adjuster, normally it's we're talking about TPAs and third party administrators versus a independent adjuster. When you're talking about?
Yeah, so we're talking about independent. It's independent adjusters who then send the claims report into Thore, which is then reviewed by Thore personnel.
Sounds good. I just want to get that clarity.
Yeah.
So that which is super standard. Are you going to be able to provide any way for digital? There's different companies call it different things, but contents claims worksheets where you're able to get all the information. It's again, how do you, when you ask for that information, how does it get to you? Are there going to be digital ways to show damages that are to their house and to their contents?
So there's a couple of thoughts on that, right? Because you see a lot of there's a lot of apps out there where it's like, oh, you don't even need to get an adjuster on the ground. They can go and, I mean, if this is what you're referencing, they can go take a picture. They can use their phone, and we have AI, and it takes a picture of the room and shows all the water damage, blah, 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 blah. And from that perspective, we're not going to sign up for that, because then when it goes to, if a file goes to litigation, then it looks like, and there's some truth to that, that's like, they didn't even care enough to show up at your house, right? And I think that sets a bad precedent. As far as technology for how, for example, you submit recoverable depreciation documents, documentation for, the whole thing. Like, yes, we definitely, that is a top list of how do we create that interface.
Nice. Awesome. Sounds good. I don't always want to make this the claims show, so I'm going to, we will talk another time more about claims.
Yeah.
Peter, I think this is, so Johnathan, we asked this question to every guest that we have on, and it's Peter's go-to, so I'll let him do it though.
Yeah, there's no pressure with this question, Johnathan, but we ask all our guests, and I think you'll have a great answer to this, what their legacy they hope their legacy to be in your professional journey. It can be also in the personal journey. But with all of these things that you're working on, what's the big vision? What's the end goal? What would you like to leave behind with all of this as you're achieving?
So it's something. It feels premature to talk about, right? Because you're just trying to get started. But I will say, it's not necessarily what my legacy is. It's what Thore's legacy is. Like, if I built a meaningful company with a meaningful mission that people are, I don't need, like the personality cult of, the company where it's all led around, my vision and blah, blah, blah. But if I build a company that people believe in and they believe in their mission and insureds believe in what we're doing, then I feel like I've done my job.
Very nice.
Very nice.
I think every entrepreneur strives for that type of end goal, right? That feels good.
Yeah.
Johnathan, we've taken up a good part of your day here.
No, it's been great.
You're building a company, and we want to let you get back to it. But we appreciate you giving some time talking to our audience about the decisions you've made, and like I said, it's a really interesting journey. I think really interesting the way you're applying technology. Very thoughtful, and I think your background is super interesting as well. You've seen some things. How and is it okay? And how, if it is okay, how can people reach out to you if they'd like to learn a little bit more about what you're working on, or maybe pick your brain on some things? Can they reach out on LinkedIn?
Or email me direct. I'm not shy. jazdani@thoreinsurance.com. And email me or reach out to me on LinkedIn. I'm always open to chat.
Great. And agents, and I mean, I've seen the progress you have in Texas, but agents that are interested in having problems solved around homeowners, definitely reach out to Johnathan as well.
Yeah, I appreciate that. And Doug, quick plug for Taurus. We've really enjoyed working with the software so far.
Oh, thank you. Yeah, you've been you are the seeing like our ability to help you get agents on very quickly was you've taken advantage of it a lot faster than others have. So excited to see what you're doing there. Cool, man. We'll let you go. Thank you so much.
Yeah, great to meet y'all. Yep.
Thanks so much, Johnson. Take care.
Bye, buddy.
Bye.
Super interesting guy. Really, really cool company. I think it's one of the few I've found that our good buddy at Kettle, Isaac, another, but like not necessarily a niched down product, right? They're competing with the big boys out there, but doing it in a different way, a very thoughtful way, and having a lot of success so far.
Great. There was so much to take in from that episode as well. I think it's just another one where we've covered so much material for people to take away, digest, and consider for their own journeys in the space, right?
Yeah. And from the claims perspective, it's just interesting because the way this conversation started, and if you have unlimited time, you could just grill people on absolutely every detail. But it's really interesting because we talked about technology and leveraging technology. How do you scale? And then we talk about technology and claims, and there's desire for technology, but there's also a rejection of certain technology, which has been certainly moving forward, which is, it started with Snapsheet. And when I was talking about companies that are incredible partners, Snapsheet has been the model of that the entire time I've worked with them for a good long time now with a variety of companies. Incredible at building out products and pushing code quickly, 2-3 days later, absolutely incredible. But
we should have Andrew. We should have Andrew on the show sometime. Actually, Peter, we'll get Andrew out to our happy hour in a couple of weeks here in Chicago.
Sounds good.
That'd be good. And so the concept of the auto estimation and virtual auto estimation and rejecting that on the homeowner side is really interesting, and also the concept of saying, hey, you didn't even care to come out. And I do take a bit of exception to that. I'm gonna be spicy here. I'm gonna poke back.
Do it. Be spicy. Yeah, push.
So I I think that there's a whole bunch of people who do not want to have people in their home. I think there's a whole lot of people who do not want to wait and have to set up an appointment to have someone look at their auto.
Yeah.
And so now I think for structural damage, you need people there, period. Yeah. And if you have flood or you have hail, you need humans. And I'm all about, drone technology. Great, perfect, sounds good. But there's something, especially if it's structural, if it's foundational, if it's flood, it's fire, you have to have a person there. But contents damaged because of some smoke or because of theft, which theft and loss of power causing spoilage to goods. These are the things that as a homeowner's adjuster you'll see all the time. Fence damage, gutter damage. You don't need people out there for those.
Dylan, it amazes me. You just have a repository of potential claims in your head, just waiting to get out every day.
Let me tell you.
What do you think about that? I'm going to give this our buddy CJ, who refuses to come on the show unless we pay him a lot of money.
That's not true. That's not true.
No, it is, because he told me the same thing. And but you know what? We're gonna plug Reserve now. Great TPA. Everyone should be using them. Now, CJ, get your ass on the show.
Full disclosure, I work with them.
I'm going to give CJ this idea. I'm not going to do it on my own. What do you guys think about for roof damage? A drone pops by, takes the pictures it needs, but then it's one of those Amazon drones that can also hold a package, and it drops a little package, but all the package says is "you've been adjusted."
Oh, I like it.
And then it takes off. Do you think that's a good claims experience?
I feel like most insurance companies would have the message, "You've been denied."
Okay. All right, Peter. That hurts. If they drop a denial stamp, that's just wrong.
Right?
That's terrible. No, I think maybe
I'm gonna call
and
CJ.
nails would be better, and a hammer.
I'm calling CJ right after this. I just want it named after me, but he can take it. I feel like they're gonna drop everything and start building that workflow in.
So when are we going to this insurance Disneyland in South Carolina?
That's a great way to put it.
I want to show you these pictures so bad.
We should tag this place in our post and see how much of the insurance gauge the MGA community will go. Yeah.
Is it like do you get a package there, like Disneyland, where they have a resort and?
All right, it's the first time trying to share my screen on a show. Can I just show this? This is
absolutely. Try. Yeah. Let me see. You're really stretching my capabilities here, Dylan.
All right, let's see if this works.
Ooh.
All right, this is indoors. Okay, guys. So
those fireballs.
This is the hailstorms that they make, right? With a super realistic hail, the ember exposure, trying to catch your house on fire. They literally are blowing them over. This fortified technology, the where my cursor is here, that is kind of, I think, their branded trademark product and method of anchoring down roofs and keeping the house together. And so the one on the left is non-fortified. That's a common, normal residential construction versus the one on the right being fortified, and it stays together in the same winds. They put them side by side and watch them blow away. It's absolutely incredible. You've got to go. It is.
We probably had free tickets until Peter called them a disease, and now we're gonna.
We could have edited that out, Doug.
No, we're keeping it in. We don't do any editing.
It's very close to IBHS, though. We got to add the H. It's very important.
So, one last thing we're not going to edit out. Dylan, should we get the guys on the show that have the 2% loss ratio and see how things are going? What do you think? I
was already poking the bear, I thought, with what I already said. I'm gonna leave that one alone.
I feel like we should mention them once a show until they come on as well. We should get their side of the story. I just want to know what's going on. I want to see how things are doing.
I think they've learned a lot since then. Since that.
Yeah, so now we're just being assholes, bringing it up again. Okay.
Yeah.
All right.
Great place to end the show, I'd say.
It is a great end on a real low note. Guys,
another week, another pod.
Yeah, great hanging out. Dylan, can't wait to see you next week. Seriously, it's been a couple months.
Paul
And
Gaglione,
Peter,
who's been getting a lot of LinkedIn buzz about his ITC parties, is also
Paul's going to be there next week. Okay, that sounds good.
Good crowd.
And then Peter, we're going to have a great time. I can't wait. Baseball game with our good friend Dave Delaney from the Lancer family. Great,
Dave Jr.
Probably the best Dave Jr. Yeah,
all right.
The best commercial auto insurer in the world. Quick plug for them. They have no interest in coming on the show, but we'll still plug it. Smart guys, lovely guys, good friends of all of ours. Hey, let's go do something fun this weekend. Let's go. Should we create some claims? Should we make some business?
Let's not make any claims.
Careful, guys. Don't bankrupt travelers where you're at.
Well, that's for
do not tag travelers on this.
That's for our Tesla that we're renting in Chicago for our road trip. Yeah. Listen, Dylan, if I have any claims questions, if something comes up, I will text you over the weekend.
Sounds good. I'll tell you what to document and not to document.
Right.
Just as important.
Right.
Right.
Well,
we're not advocating claims fraud. I want to be very clear.
I'll have my plaintiff's attorney with me.
Okay, sounds good.
Your favorite friend.
Be safe out there, guys. Take care.
Right, guys. Chat with you later. Thanks everyone for listening. Bye-bye.
Bye.